Hello and welcome. This is Business Incorporated coming to you live from Lagos. I'm Chimezie Obi Iwago. On the show today, Nigeria's PMI retreats to a negative 47.9 reading in September from 52.2 positive in August. South African Deputy President begins a two-day visit to Vietnam to strengthen bilateral economic and trade relations between the two countries. Plus, Zimbabwean banks slash withdrawal limit. Nigeria's Purchasing Manufacturing Index retreated to a negative 47.9 reading in September from 52.2 positive in August. The steep decline in the manufacturing level, according to FBN Quest, was driven by the secondary sub-indices as well as employment levels. Foreign exchange sourcing issues for the majority of companies highly dependent on imported inputs continue to bite. While remaining negative for the 6 months in a row, the sub-index for output did pick up 2 points to 47.5 levels. FBN Quest is projecting a further contraction in Nigeria's gross domestic product in the just concluded third quarter, with the expectation of minus 1.7% year-on-year. And to the global markets, beginning in Asia, stocks there were higher today, with the ASX recovering earlier losses to struggle into positive territory. The Reserve Bank of Australia held cash rates steady at 1.5%, saying it was assessed the impact of previous cuts in August and May. The Australian benchmark ASX 200 was up 0.1%. Japan's Nikkei 225 was up 0.62%, while in Hong Kong, the Hang Seng Index was up 0.1%. South Korea's benchmark Kospi was up 0.5%, with makeup giants making gains. Mainland Chinese markets are shut for the Golden Week public holidays. European stocks opened higher today, with Deutsche Bank back in focus for its first trading day of the week following a public holiday in Germany. It's the first trading day in Frankfurt, and my colleague at the exchange, Ulrich Bartz, is already gearing up to the week's activities at the market. Good afternoon, Ulrich. Thank you for joining us. From the look of things, you did enjoy your holiday, your long weekend, actually. Right, Ulrich.
I'm sorry, I didn't understand the question, Chimmy. There are voices
well, I haven't
in the
asked
background.
any question.
Could you repeat the question, please?
I haven't asked any question, Ulrich. I'll only pass a compliment there. In any case, here is the question. Deutsche Bank is back in trading today as German DAX reopens.
Mal lauter, bitte.
Yeah, what is the latest from all the issues that the bank had to deal with the U.S. authorities?
Yeah, the Deutsche Bank is still the talk of the town here. How could it be otherwise? The Deutsche Bank chair, Jimmy, is going up. It's going up by about 2% as we speak, but it's fluctuating. And an analyst who's being quoted here in the headlines is saying that the Deutsche Bank has been downgraded to an object of speculation here in the market. That's seen as a very derogatory remark, and indeed there's lots of speculation around it. As far as the negotiations with the U.S. on that penalty that the Deutsche Bank is facing there is going, there's no concrete news as yet. The Deutsche Bank share jumped through the roof on Friday when there was one report that was unconfirmed by a wire agency that it was going to be a deal somewhere in the area of $5 billion, and that would have been much less than the market was fearing. That number is still out there somewhere, but not being confirmed. It's said now that the chief people from the bank are going to be in the United States and talking to officials there during or at the edge of the IMF World Bank meeting in Washington to discuss the matter. I think everyone here in Germany, probably in the world financial markets all over, are hoping that it's a sum that the Deutsche Bank can manage without any sort of troubles. But there are also people here who say that's not guaranteed, given the scope of the accusations against the bank.
Now, aside from the Deutsche Bank, the UK banks are also in focus with regards to Brexit and new stress tests by the Bank of England. What are the conversations from investors on these issues?
Yeah, I think with the British banks, with the Brexit being announced until March, as the British Prime Minister said on the weekend, I think the market thinks that spells double trouble for those British banks. Because they might be losing passporting rights as soon as Britain is no longer a part of the EU, depending on the outcome of the negotiations. And because that would also affect the British economy, they'd be suffering in their home market with doing less business or less lucrative business with the home economy. The Brexit is also still on the agenda here as one of the main economic and political risks facing Europe and I think the whole world within the next few months.
We will particularly keep our eyes on the result, the outcome of that stress test. Now, it's the beginning of a new week for you there at Frankfurt Stock Exchange, and U.S. September employment is the key data for this first week in October. What are the market expectations?
Well, the markets are expecting the U.S. labor market to have added new jobs, non-farm payrolls, that is, the whole economy basically when you exclude farms. And the economists polled, almost 60 by Reuters, are saying that there will have been 170,000 new jobs added to the labor force. Now, that is a number. It's a solid number, but it's nothing to write home about, and it's not going to make a rate hike any more likely. That's not going to be the deciding factor. But labor market data have surprised a lot of times in the past months and years, and we'll see what the number is, and the market is sure to react one way or another. If the numbers are strong, it could mean that the Fed raises rates. That would be seen perhaps as a negative. The market might go down here as a result. But with strong numbers, people could also interpret it in the current climate of a strong U.S. economy helping out others as well. So the market could also go up. You have to see when the market data is there, what actually happens. But certainly the U.S. economy, the rate trends there, they're also going to be front and center here, the more so as we move towards that Friday.
Right, we'll sure keep our eyes on that data, which of course is expected to come out. That's on Friday. Thank you very much for your time, Ulrich.